Before you begin today's assignment, problem number 11, I want to take a time out and do just a bit of review with the work you did yesterday. First of all, a couple comments. It's often helpful to work together on assignments, particularly in a course like this. You can help each other, but I'm sensing that this is not always happening very well because some of you are struggling with the same things over and over in the problems. So it may be helpful to work together, but make sure that you understand what you're doing and what should be debited and credited, because we have a test coming up on Monday over this topic, and you'll have to do some journalizing. And then we have a quarter exam coming up next week, and that will require you to do some more. So what I want to do is some reviewing here based on yesterday's assignment, particularly on some transactions that gave you difficulty. So we will go over them based on the work that you did yesterday, and then I'll have another problem for you to do today. So let's take a look at the ACE Tax Services Incorporated. And again, this is the problem that you just completed yesterday. In the instructions, first of all, I want to point this out. Not every company has a revenue account called sales. This one has something different. As it says here, this company prepares tax returns, so they offer a service. They don't sell a product. So the revenue account is not called sales, but it's called tax services revenue. It works just like sales, increases on the credit side, just like any revenue account, but that's the title of it. And remember that in the journal, we're putting names of accounts. So you don't simply put the word paid or customers paid us or that type of description in the journal. There's a line for the description, but where it says accounts, we need actual names of accounts. Let's take a look at April 1st. April 1st, 2018, received cash from customers for tax services revenue. It should be a simple transaction. If we receive cash, that tells us every time that cash should be debited. At least that should be a clue for you. You know that cash is an asset. Assets show increases on the debit side. So on 4/1/18, we will put cash and we will debit 600. And that increases. We got more money. The next account is a credit to tax services revenue. This is the revenue account. It also went up. We have more revenue, so we credit. A revenue account increases on the credit side. And then we have a brief description. Second one should be, again, fairly simple, I would think. Paid monthly rent. You should understand that rent is a cost of doing business. We don't gain an asset for rent. We're not buying the office. We are renting it. So that is an expense. That's the account that goes on that line. Not accounts payable, not accounts receivable, but rent expense. And again, to clarify, it would be proper to put rent expense, not simply rent, just to clarify that this indeed is an expense. It went up, we paid more rent, we debit $850. Expenses increase on the debit side. And we pay cash, and we can see that because we wrote a check. Cash goes down, so therefore it's credited by $850. The next one, again, a revenue transaction. This time on April 3rd, a customer charged for tax services. So accounts receivable is debited. We did not get cash this time. Accounts receivable is debited because somebody owes us money. That's an asset. So if an asset goes up, it is debited. So accounts receivable means somebody owes us more money. So it goes up, it's debited, and we put 300 in the debit column. Again, it's a revenue account, and revenue goes up, we got more revenue, and it's credited by 300. Next couple, I think most of you did pretty well. Office equipment. I might point out that office equipment is an asset. A couple of you put office equipment expense. You can't be both. You can't be an asset and an expense at the same time. So this is an asset, something of value. We bought office equipment. In this case, I guess it was a computer, as the description indicates. So we have office equipment increasing, it's debited. Cash, again, was used. We know that. We wrote a check. Cash goes down, it's credited by the 1100. Next one, telephone expense. Again, this is an expense, a cost of doing business, handled the same way rent was. Telephone expense debited, cash credited, we wrote a check. The next one, April 6th, gave a lot of you trouble. Let's look at it. We paid on account for office furniture we charged last month. We're not buying new office furniture here. We bought the office furniture last month. We're not buying any more of it. We're simply paying the bill. So when it says paid on account, it means cash is involved. You see a check, number 204. So that means cash has to be credited. But what's debited? Well, when we charged it, if we bought it on account, accounts payable would be involved. Accounts payable is a liability account, meaning we owe somebody some money. So last month we charged it, accounts payable would have gone up. Accounts payable is a liability, liabilities increase on the credit side. So when we pay it, we obviously owe less money. So that's why accounts payable is debited. Accounts payable, again, a liability, decreases on the debit side. So we debit accounts payable, we owe a little less, we debit 700, and we also decrease cash because we paid it out. So some entries have 2 increases, some have 2 decreases like this one, some have an increase and decrease, but they always have a debit and a credit. Next one was the new one I threw at you to see how you could interpret this. We did pay salaries, it's a salaries expense, but the key here on April 7 is that we paid weekly salaries. That involves cash. So even though it says payroll checks, we're still spending the company's money. So the expense went up. We paid out more salaries, and we have that cost of doing business. Cash is credited. Cash goes down because we paid it out. The employees got the money, so we lost the money. It decreases. So cash is involved. Even though it's payroll checks, still, and we'll talk about this later, how this all works out, but still our cash goes down. And finally, the last one, the customer paid part of what he owed to us. So if he's paying us some money, we know that cash is involved. Cash goes up. It's debited by 100. Accounts receivable, he had charged it apparently back on April 3rd, and now he is paying it off. Accounts receivable is the account that is an asset. It shows that somebody owes us money. It increases on the debit side, but in this case, it goes down because the customer is paying us. So people owe us less money. So that's why accounts receivable decreases, which means it's a credit. Okay? I'm going to give you one more entry here that's not found in yesterday's assignment, but you'll find it in today's assignment, and I want to prepare you for it. Let's say on April 9th, we have another transaction. In this transaction, a customer contracted us for some tax services. So that means tax services revenue up here is involved. So we are getting in some revenue. But the customer didn't pay us cash for the whole thing. He paid cash for 100, and he charged the rest of it. He charged 300. So how do we do that? Well, this is what you'll see in today's assignment. If a customer contracted us for tax services and paid us 100, then cash is involved. We got 100, so we debit cash. But he charged the rest of it. He charged 300. So we now use another asset account. Whoops. Accounts receivable is also debited. Let me get this properly. Accounts receivable is also debited. By the way, I'd ask you to check your spelling when you do this. A lot of you have trouble with spelling receivable. Accounts receivable is also an asset. It goes up because somebody owes us, this customer owes us more money. He owes us $300. The credit is to, what was the name of our account? Tax Services Revenue. How much revenue do we get? We get $400. Even though he didn't pay it all yet, it's still considered revenue. So this customer paid us $100. Cash went up by $100. He owes us $300. Another asset went up by $300. The total revenue went up. It's increased by the total of $400. Now you have a transaction that encompasses 3 lines, not 2. So this is the new one you'll run into. But like every other transaction, debits have to equal credits. No matter what happens, the debit side of every entry has to equal the credit side, even though you have 2 debits and 1 credit. The reverse is also true. Maybe we buy something and we debit accounts payable and we charge part of it. So we pay cash for part of it and we charge the other part. So in that case, accounts payable would be debited by the total amount. Cash would be credited by the amount that we paid, and accounts payable would be credited by the rest of it that we owe. Again, debits have to equal credits. So at this point, I'll ask you to do 2 things. First of all, I want you to go back, look at your assignment from yesterday. Go back to your grades and scroll down and open up your spreadsheet, and you'll see the mistakes you made. I have highlighted, and you'll see the corrections there, and see if you now can understand what you did was incorrect. If you still have questions, then we'll need to take it further. You need to contact me if that's the case. But hopefully this video and you examining the work that you did yesterday will clear up some things for you. And again, when you study, that's what you should study. Study the work that you did and the comments I made in these videos. So at this time, I will ask you to do that. Go back and check the work that you did and check the mistakes and the corrections that I've shown you on that work. And then after that, go back to your course page and do the journalizing in problem number 11.